Welcome back to Alpha Recap, the laid-back market wrap from stockalpha.ai. We're looking back at last Friday's tape, and today we're breaking down the structural flows and the wild microcap action that dominated the weekend. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. There was a lot to unpack, from an index inclusion that could change passive demand curves to literally dozens of tiny names that ripped and then crashed. It felt like two different markets in one day.
Yeah, that tracks. So, what really stands out here is the split between those big structural stories and the chaotic, retail-driven microcap moves. Let's start with the structural stuff, Lumentum and the NASDAQ 100 news.
Right. Lumentum's surge and the reported path to inclusion in the NASDAQ 100 was the headline that could have the most persistent impact. Inclusion in that index typically forces index funds and ETFs that track the benchmark to buy. That mechanical demand can lift liquidity and momentum around the stock.
Analysts were saying inclusion dates and rebalancing windows can create short-term liquidity squeezes. Walk me through what that looks like in plain terms.
Sure. Imagine a big passive fund that has to mirror the NASDAQ 100. If Lumentum is added, that fund needs to buy shares to match the index, regardless of whether the fund's managers like the company. So ahead of the official reconstitution date, you often get higher demand and tighter float, which can push the stock up. After the inclusion, volatility can stay elevated as positions get fine-tuned.
So it's demand that's driven by mechanics rather than new fundamental bullishness.
Exactly. And analysts noted this could ripple to optical and networking peers through correlated flows. It's one of those times when passive indexing actually creates active price effects.
Okay, now ARK Invest. They reportedly trimmed advanced micro devices and boosted exposure to CoreWeave while tweaking another defense and aerospace name. Tell us why that mattered.
ARK's filings showed a meaningful rotation. They cut back exposure to advanced micro devices by a substantial percentage, while increasing exposure to CoreWeave, which is more of a specialized AI infrastructure play. The signal is that active managers are continuing to chase GPU and cloud compute themes versus broader semiconductor exposure.
So, when you step back and look at this, ARK's moves are more thematic than stock-specific?
Right. It's thematic rotation, moving capital from general-purpose chip makers toward companies that plug directly into the AI compute stack. Analysts noted that kind of reweight can add headline support to specific AI-adjacent names and also create short-term cross-flows within the supply chain.
And there was also a confidential filing tied to Inspire Brands, the parent of Dunkin'. What did that mean for the IPO pipeline?
They filed a confidential S-1, which is the formal start of an initial public offering process. On its own, a confidential filing doesn't move markets until we see the public S-1, with valuation, float, and timing. But it signals that appetite for consumer franchises remains. So people will be watching for a public filing to set price discovery in motion.
Got it. So those are the structural threads. Now let's pivot to the thing everyone on Reddit was freaking out about, microcaps.
Oh man, the microcap tape was wild. There were huge percentage moves on tiny bases, names at sub-dollar prices that doubled, tripled, sometimes more. A few examples. One name jumped about 150%, another about 140%, another about 135%. Those moves often happened on very low absolute volumes, or with extremely shallow floats, which amplifies slippage risk.
And then on the flip side, there were some brutal crashes, right?
Yes, several names cratered. One plunged about 87% on roughly 209 million shares. Another collapsed about 86% on around 16 million shares. There were many examples like that. When you put large blocks into thin books, you can force prices massively lower, especially if there's news or a trading halt.
So, liquidity risk is back in the spotlight.
Totally. The data suggested that many of the big percentage moves were liquidity-driven rather than fundamental re-ratings. You get headline attention, momentum traders pile in, volume spikes, and then, voila, huge gaps and potential reversals.
There were also some extremely large volume prints on small names, like names trading around 296 million, or nearly 300 million shares. That's crazy.
Yeah, heavy volume on low-price names increases headline risk. One name traded about 296 million shares, another about 298 million shares, and a third about 259 million shares. Those kinds of prints can fuel continuation or violent reversals depending on news and order flow.
Not a great day if you were trying to trade size in those markets.
Exactly. Slippage and execution costs can be huge. Analysts suggested risk managers should revisit position sizing and stop rules for microcaps. For most longer-term investors, these swings read as noise unless there's a fundamental change or a formal filing.
Let's connect this microcap drama back to the institutional stuff for a second. How do those big flows, like the index inclusion and ARK's rotation, interact with the small stock chaos?
They're largely separate drivers, but both change the market's liquidity landscape. Institutional flows reallocate capital across sectors and can create persistent demand or supply in mid to large caps. Meanwhile, retail-driven microcap action creates short-term volatility and headline risk. The combination raises overall weekend gap risk, meaning when markets reopened Monday, gaps could have been big in either direction.
Right. And with a long weekend, the chance that news hits outside market hours only increases the gap risk.
Exactly. Analysts recommended watching S1s, 8Ks, SEC filings, and any trading halts over the break. Those are the likely catalysts that would reshuffle the biggest winners and losers when the market reopened.
Quick reactions, short bursts. Ready?
Yep.
Massive microcap moves. Noise or signal?
Mostly noise, unless backed by filings.
Index inclusion. Transient or lasting?
Could be lasting, because passive flows can persist for weeks.
ARK rotation into AI infrastructure. Interesting?
Very. It pointed to concentrated interest in GPUs and cloud compute.
All right, let's get practical. What's on the watch list for Monday?
First, the public S1 from Inspire Brands. Look for pricing, float, and a target market cap. Second, confirm the NASDAQ 100 inclusion date for Lumentum and pay attention to the ETF rebalancing windows. Third, monitor follow-through on the company's ARK adjusted, advanced micro devices, and CoreWeave, especially in related GPU and cloud infrastructure names. Fourth, watch the microcaps that had extreme moves for halts, reverse split notices, or SEC filings. And fifth, keep an eye on semiconductor ETF dynamics. Leveraged products had heavy volume, and one of those inverse leveraged products fell about 16%, trading massive volume. That can presage broader sector swings.
Risk management tips in a sentence.
Set clear execution rules for microcaps, revisit position sizing and stops, and treat most tiny stock moves as noise unless a formal filing changes the story.
Thanks. Honestly, I was a bit surprised by how much of Friday felt like two separate markets. Anything else to flag before we wrap?
Just one more thing. Watch for cascade effects. When big funds change allocations, that can reprice suppliers and mid-cap names tied to those themes. So even if the headlines feel small, the ripple can be meaningful for certain sectors over several days.
Big ripples from small headlines. Love it. Okay, let's close with the takeaways.
First, structural flows mattered. The Lumentum index path and ARK's thematic reweights could drive multi-day to multi-week repricing in AI and optical supply chain names. Second, microcap volatility was extreme and largely liquidity-driven. Expect higher weekend gap risk and treat most moves as noise until filings prove otherwise. Third, risk management was key. Position sizing, execution rules, and watching filing calendars will matter into next week.
Good summary. Quick reminder, This is all informational. Analysts note trends and data. This isn't personalized investment advice or a recommendation to buy, sell, or hold any security.
Right. Always consult a licensed professional for tailored guidance.
That's it for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time.